It is
But the
another
other
market.
thing, I think I mentioned this in one of the other episodes too. I was reading an article on Bloomberg about they were doing like some investigation on whether or not, because it is so hard for people to afford a home right now in Ontario and stuff. A bunch of my buddies are single and stuff like that. So it's like, how do they afford a home in Toronto? Like you can't unless you're making like a crazy salary, right? So they're saying that it might even make more sense to just invest, like to literally just rent for your whole life and just put money in the stock market. Because like if you look at like it's like I said on one of the other episodes, you put $30,000 in the S&P when you're 30 years old. By the time you're 65, it's worth 1.5 million, right? So like same kind of deal. Like I look at, like, again, if I just look at my my cottage, like it was bought for $30,000 in the late 80s. So here we are, 30 something years later, it's worth that $30,000. If you put it in the S&P, would almost be worth on par what the property value is worth. So depending on how the markets move, it actually might make a lot more sense for you to just invest in the markets and just rent.
Yeah, that's a really good point. You know what? I wonder if the culture is just going to go that way in like 10 to 15. Because like, I don't know if you noticed, like in just because we're similar age, in just the last 10 years, there's been a huge shift in like. So I've got a hard drive that's full of MP3s and movies. Because
Yeah.
when we're growing up, it's all about owning shit and keeping shit. And then now it's all about Spotify, Netflix. I don't need to own anything. I'll just keep paying the monthly fee and I'll have access.
Yeah.
Right. So like not home ownership's like a natural progression of that. Like, why am I going to own a home? I'm just going to pay my monthly fee.
Right. Well, think about it. If you want to own a home, like first off, you want to put 20% down, because then you're not paying your mortgage insurance, which makes your payments go up like $500-600 a month, depending on the value of the property. So let's say, you're trying to buy a house that's worth, say, $1 million, which around here is kind of, your run of the mill generic house, unfortunately. And you got to save up, like, you got to save up $200,000. And then you still have to have enough income from your job to be able to pay an $800,000 mortgage. So like, it's very difficult to do. So instead of trying to save up, desperately save up $200,000, which could take you decades, just rent, like pay, because you got to, like, say your mortgage payments are going to be $2,500 a month or whatever, or $3,000 a month, including your utilities and whatever. Rent a place, so you're paying that same amount. The amount of time it would take you to pay $200,000 in rent is, what, like, astronomical compared to what it would take you to save that kind of money. So if you're taking all that extra money that you would have been saving to buy a house, which is also continually going up in value. So by the time you actually save that $200,000, surprise, now you need $350,000. Just pay your rent, find a decent place that you like, don't go crazy, and just put all your money into the markets, into safe investment stocks. And like, you probably end up getting the same, like a very comparable return to the actual real estate.
And the other thing, I just thought the immediate danger of saving is like just the idea of inflation, right? Because the government keeps printing the money, and the buying power of that dollar you're saving, you're nesting away, is just being eroded every year.
Mm-hmm.
So Sam, for my screen, could you just throw this up real quick? I just really quickly, because I'm gonna. Brendan is still hesitant on pimping his family's mutual fund, but I'm not. So I think last time you said they did, or at least privately, they said you were doing like compound 17% a year for quite a while. Like, so this is like a normal return for them, right?
Mm-hmm.
And I was just thinking, like, if you should be in the market, but let's say you don't feel up to it to manage yourself, find a good mutual fund, especially ones like Brandon's where they have their own capital in the fund itself, so they have skin in the game. You put $20,000 initial investment, you get 70% a year interest, 15 years to grow. It's $250,000.
Yeah.
And try saving $250,000 in 15 years versus this. So like,
but you keep adding into that too, right? So you put
that's right.
$30,000 in, and then every month you keep buying more and more and more stock. So yes, I don't change it for $400
500 a month.
Yeah, $500.
$400. Let's do 400 conservatively speaking. And look at that compound. What's that? Eighth wonder of the world, Warren Buffett says.
Yeah, look at that.
Now you're up just to the addition of 400 a month. You doubled to $500,000 in the same period.
Yeah, so you save up $20,000, put in the stock market, add an extra $400 a month, and then in 15 years you have $600,000. That'll buy you a house. If you just try and save that money without putting it in the market, you'll never get a house.
At the very least, I think if people are into long-term planning, which I think they should, it's like, how are you going to get that down payment? Well, you start with a little sum, you nest away 400 or whatever it is a month, you can, and then for the next 15 years, this will be your down payment. Because that's mostly the barrier to entry for owning a home, right? It's not necessarily the monthly mortgage payments. It's that first chunk that you're required to pay.
Yeah, for sure. So that's why this is like so important though, is that, I tell this to everybody. I was like, it's so important that you invest in the stock market, because otherwise you just get left behind. I mean, like, the economy keeps growing, everything keeps moving forward. Like, if you have $20 sitting on your desk, next week it's less than $20. 2 weeks later, it's less than 20, even more less. It's just that $20 10 years from now, it might only be worth $12, right? Like, it just fizzles away. Like, it's garbage. Like, cash is absolute garbage. Like, the only reason that I have a certain amount of cash on hand is just because of emergencies. I got enough money saved away that if, my water heater explodes, or I got to redo my roof, or, a tree falls through my living room, like stuff like that. Like, I have enough cash on hand that I can cover kind of those basic things. But other than that, like, I invest everything in the markets, because the markets move with the economy. So I want to move with it. I don't want to sit behind and try and desperately chase it. It doesn't make sense.
Yeah, I was gonna say, what's his name? Ray Dalio, the one of the largest. He runs one of the largest hedge funds. He's famous for saying cash is trash.
Yeah.
And it's like, I did disagree with Brendan once. I'm like, cash is trash, but it's too general of a term. Like, just to have it and not have a purpose for it is absolutely trash. It's a waste. But like, me and you, we both have cash on the side, but we know exactly what we want to do with it, given the circumstances.
Yeah, I mean, everybody needs to have a certain amount of cash on the side. Like, you don't want to be like, you don't want to have like $200 in your checking account. I'm sure any of you guys that are traders or investors, you probably all seen those little memes where it's like, life of a trader, $500,000 in my brokerage account, $300 in my checkings account. Like, oh, I have no money, I can't go out this weekend, right? Like, that's all funny, but you don't want to actually live like that. You want to have like at least a decent amount of money saved away that you can have in an emergency. Because the worst thing that could happen to you as an investor is if you go into a bear market, or like a stock crash. Like, let's say we had 2008, where stocks were just selling off. It took 2.5 or 3 years for it to get back up to the same levels that it was. The last thing you want to do is to have to sell stocks that you've owned for years at a huge loss because you didn't have enough money in the bank, and you got in a car accident, you had to buy a new car. So now instead of buying that new car for $40,000, you had to sell a whole bunch of stock, so that car actually cost you $200,000. That's the last thing you want to do. So that's why cash is important, for that reason, is to have enough on hand that you're comfortable. You look at all the scenarios. If anything really bad happens, catastrophic, you have the cash to pay for it.